What if I told you there are companies out there, right now, poised to make you serious bank over the next decade? Not just your average run-of-the-mill companies, but absolute titans of their industries, primed for explosive growth. We're talking about companies leading the charge in innovation, from revolutionizing how we power our homes and businesses, to transforming the way we eat and interact with technology. In this video, we're diving deep into 3 monster stocks to buy now and hold for the next 10 years. These stocks, I believe, are absolute must-haves for any long-term portfolio. We're talking about an industrial powerhouse with its hands in everything from aerospace to building technologies, a fast-casual restaurant chain rewriting the rules of the game, and a tech behemoth that needs no introduction. If you only watch one video today, make sure you watch this one, all the way till the end. We're talking about potentially life-changing returns here, and while you're at it, hit the like button. Let's get 1,000 likes on this one. Share the video, and leave your thoughts in the comments. Subscribe to the channel so you don't miss out on the next important financial investing update. Today's video is sponsored by Forecaster Terminal, the best stocks analysis software I use in finding these incredible stocks. More on that later. First up, let's talk about a company that's been a cornerstone of American industry for over a century. Honeywell International, ticker symbol HUNT. Founded in 1906, Honeywell has grown from a small heating company into a global powerhouse, touching nearly every aspect of modern life. From the moment you wake up to the time you go to bed, Honeywell's innovations are likely making your day smoother, safer, and more efficient. Now, Honeywell might not be the flashiest name on the market, but trust me, this is a company that knows how to perform. With a legacy of over 100 years, they've mastered the art of staying relevant and competitive in an ever-changing market. Their ability to adapt and innovate has kept them at the forefront of multiple industries. We're talking about a global conglomerate with a diverse portfolio that spans aerospace, building technologies, performance materials, and safety solutions. This diversification not only spreads risk, but also positions Honeywell to capitalize on various growth opportunities across different sectors. Think about it. Every time you step on a plane, chances are you're interacting with Honeywell technology. Their aerospace division is a critical component of the aviation industry, providing advanced avionics, engines, and other essential systems that ensure safe and efficient air travel. They make everything from avionics systems to engine components. These are not just any components, they are state-of-the-art technologies that enhance the performance and safety of aircraft, making Honeywell a trusted name among airlines and aircraft manufacturers. In fact, they're one of the leading suppliers to aerospace giants like Boeing and Airbus. This partnership with industry leaders underscores Honeywell's reputation for quality and reliability, making them an indispensable player in the aerospace sector. But Honeywell's reach goes far beyond just airplanes. Their expertise extends into building technologies, where they develop cutting-edge solutions for energy efficiency, security, and comfort. Imagine living in a smart home where everything from the thermostat to the security system is seamlessly integrated and optimized. They're also a major player in the building technology space, developing innovative solutions for energy efficiency, security, and comfort. These technologies are not just for homes, but also for commercial buildings, making workplaces safer and more efficient. From smart thermostats to fire detection systems, Honeywell is helping to create the buildings of the future. Their products are designed to make buildings more intelligent, responsive, and sustainable, contributing to a greener planet. And let's not forget about their performance materials and technologies division. This segment is a powerhouse in its own right, producing high-performance materials and technologies that are essential in various industries. Honeywell is a leading producer of specialty chemicals, advanced materials, and process technologies used in a wide range of industries, from automotive to electronics. These materials are the building blocks of countless products we use every day, from cars to smartphones. Now you might be thinking, okay, Honeywell sounds like a solid company, but what makes it a monster stock? The answer lies in their consistent performance and strategic vision. Well, here's the thing. Honeywell has a proven track record of innovation and growth. They are not content with resting on their laurels. They're constantly investing in research and development, bringing new and exciting products to market. This commitment to innovation ensures that Honeywell remains a leader in its fields, continually offering cutting-edge solutions that meet the evolving needs of their customers. But it's not just about innovation. Honeywell's financial health is equally impressive. Honeywell also has a rock-solid financial position. They have a robust balance sheet, strong cash flow, and a disciplined approach to capital allocation, which allows them to invest in growth opportunities while returning value to shareholders. They generate consistent cash flow, have a strong balance sheet, and are committed to returning value to shareholders through dividends and share buybacks. This financial stability makes Honeywell a reliable investment, even in uncertain times. Honeywell International, a $136 billion industrial giant, is currently trading at around 24 times earnings, similar to its 2020 valuation and well below its 2021 peak. This suggests a potential opportunity for investors looking for value. The company continues to expand strategically with a recent $2.16 billion acquisition of Sundyne. This move is expected to enhance Honeywell's energy and sustainability solutions business, boosting both sales growth and segment margins in the first year of ownership. Innovation remains a key driver for Honeywell, with the launch of a cutting-edge training program for flight test teams in collaboration with the International Test Pilots School. These initiatives position the company for steady operational improvements. Financially, Honeywell maintains a solid profit margin of 18.74%, reflecting effective cost control. A remarkable return on equity of 596.13% suggests efficient capital utilization, while a debt-to-equity ratio of 27.59 indicates a moderate reliance on leverage, managed effectively through consistent earnings. Key financial health indicators, including a strong Altman Z-score and Piotrowski F-score, reinforce the company's stability. Honeywell's competitive edge remains strong, backed by brand recognition, high switching costs, and cost advantages. With a competitive rating of 8 out of 10 alongside consistent insider buying, the company stands as a well-established industrial leader with stable operational efficiency and a favorable risk profile. And here's the kicker. Honeywell is well positioned to benefit from several megatrends shaping the global economy, including the rise of the middle class in emerging markets, the increasing demand for energy efficiency, and the growing need for infrastructure upgrades. These trends are not just short-term fads, they are long-term shifts that will drive demand for Honeywell's products and services for years to come. All of this adds up to one thing. Honeywell is a company built for the long haul. Their diversified portfolio, commitment to innovation, and strong financial health make them a resilient and adaptable company, capable of weathering economic storms and capitalizing on new opportunities. They have the products, the financial strength, and the global reach to deliver consistent growth for years to come. Whether it's through their aerospace innovations, building technologies, or performance materials, Honeywell is positioned to thrive in a variety of market conditions. If you're looking for a stock to buy and hold for the next decade, Honeywell should be at the top of your list. With their proven track record, diversified portfolio, and strong financials, Honeywell is not just a good investment, it's a great one. Alright, let's move on to a company that's changing the way we think about fast food, Chipotle Mexican Grill, ticker symbol CMG. This isn't just another fast food chain, it's a revolution in the way we perceive quick dining. Now I know what you're thinking, Chipotle, seriously? But let's dive deeper into why this company stands out, but hear me out. Chipotle is more than just a burrito joint. It's a brand that has redefined the fast casual dining experience. They're a cultural phenomenon, a pioneer in the fast casual dining industry, and a company with incredible growth potential. Their influence extends beyond just food, it's about a lifestyle. What sets Chipotle apart? First and foremost, it's their commitment to quality. They have a stringent policy on sourcing ingredients, ensuring that what you eat is not only delicious, but also ethically sourced. Chipotle uses fresh, high-quality ingredients, and they prepare their food right in front of you. This transparency builds trust and loyalty among customers. No mystery meat here, folks, just real wholesome food that tastes amazing. Their menu is simple yet versatile, catering to a wide range of dietary preferences. But Chipotle's appeal goes beyond just the food. It's about the entire dining experience, from the ambiance to the customer service. They've also built a brand that resonates with today's consumers. Their marketing campaigns are innovative, often tapping into social issues and trends that matter to their audience. They're committed to sustainability, sourcing their ingredients responsibly, and minimizing their environmental impact. This commitment is not just a marketing gimmick, it's a core part of their business model. They also treat their employees well, offering competitive wages and benefits. Happy employees mean better service, which in turn leads to satisfied customers. And let's talk about their growth. Chipotle has been on an absolute tear over the past decade, expanding their store count and growing their revenue at an impressive clip. Their financial performance is a testament to their effective business strategy. And the best part? They're still just scratching the surface of their potential. With plans to open more locations and enter new markets, the sky's the limit for Chipotle. Chipotle has a massive runway for growth, both domestically and internationally. They're exploring new markets and adapting their menu to cater to local tastes. They're constantly innovating, introducing new menu items and expanding their digital ordering and delivery capabilities. Their tech-savvy approach has made them a favorite among younger consumers. And with a loyal customer base and a strong brand, Chipotle is well positioned to continue its dominance in the fast casual space. Their ability to retain customers is a key driver of their sustained growth. Now, I'm not going to lie, Chipotle has faced its share of challenges in recent years, from food safety concerns to rising labor costs. These issues have tested the company's resilience. But here's the thing. Chipotle has always found a way to bounce back. Their ability to learn from mistakes and implement effective solutions is commendable. They're a resilient company with a proven ability to adapt and overcome obstacles. This adaptability is a crucial factor in their long-term success. Chipotle is valued at nearly $66 billion. The company has been expanding its digital ecosystem, with online orders now accounting for 37% of total revenue. Its latest menu addition, the Chipotle Honey Chicken, aims to attract even more customers and drive revenue growth. Financially, Chipotle is delivering strong results, with a 17.77% profit margin and a return on equity of 41.97%, the company showcases highly efficient operations. A debt-to-equity ratio of just 1.17 suggests balanced financial management, relying on minimal debt while maximizing shareholder returns. Currently, Chipotle's stock price of $48.53 sits nearly 30% below its fair value estimate of $62.94, making it an attractive opportunity for value-seeking investors. The company's financial health remains robust, supported by a high Altman Z-score, a solid Piotrowski F-score and a low Benish M-score, indicating strong integrity in its financial reporting. Additionally, Chipotle's active share buyback program enhances investor value by reducing outstanding shares over time. With a competitive advantage rating of 8 out of 10, Chipotle continues to dominate the fast casual space, leveraging its brand strength, operational efficiencies and high-quality offerings. Though its presence is primarily in the U.S., the company has been making gradual international expansions, setting the stage for long-term growth. If you're looking for a stock with a long growth runway, a strong brand and a commitment to quality, Chipotle is definitely worth a closer look. Their financial metrics and market position make them a compelling investment. This is a company that's changing the way we eat, and I believe they're just getting started. The future looks incredibly bright for Chipotle, and it's exciting to see where they'll go next. Finally, let's talk about a company that needs no introduction. Microsoft, ticker symbol MSFT. Founded by Bill Gates and Paul Allen in 1975, Microsoft has grown from a small software company into one of the most valuable and influential tech giants in the world. This tech behemoth has been a dominant force in the industry for decades, and they show no signs of slowing down. From their early days of developing the MS-DOS operating system to the launch of Windows, Microsoft has consistently been at the forefront of technological innovation. Microsoft is a true giant, with its hands in everything from operating systems and software to cloud computing and gaming. Their flagship products, such as Windows and Office, have become household names used by millions of people around the globe. They're the company behind Windows, Office, Azure, Xbox, and LinkedIn, just to name a few. Each of these products has not only been successful in its own right, but has also helped to create a vast ecosystem that keeps users and businesses deeply integrated with Microsoft's services. But what makes Microsoft a monster stock for the next decade? It's their ability to continually adapt to changing market conditions and technological advancements. It all comes down to their ability to adapt and innovate. Microsoft has never been a company to rest on its laurels. They are constantly pushing the envelope, investing heavily in research and development to stay ahead of the curve. Microsoft has consistently reinvented itself over the years, transitioning from a PC-centric company to a cloud-first powerhouse. This shift has been pivotal in maintaining their relevance and driving their growth in the modern tech landscape. Their cloud computing platform Azure is a major growth driver, competing head-to-head with Amazon Web Services and Google Cloud. Azure's robust infrastructure and wide range of services make it a preferred choice for businesses looking to leverage cloud technology, and with the increasing demand for cloud services, Microsoft is well-positioned to capitalize on this massive market opportunity. The cloud market is expected to grow exponentially in the coming years, and Microsoft is poised to be a major beneficiary of this trend. But Microsoft's dominance extends far beyond just the cloud. They have a diversified portfolio that spans multiple high-growth sectors. They're also a leader in gaming, with their Xbox console and their growing portfolio of game studios. The gaming industry is booming, and Microsoft's strategic acquisitions and investments in this space are paying off. And let's not forget about their productivity suite, Office, which remains the industry standard for businesses around the world. With the rise of remote work, tools like Microsoft Teams and Office 365 have become essential for collaboration and productivity. Microsoft is a cash-generating machine, with a fortress balance sheet and a commitment to returning value to shareholders through dividends and share buybacks. Their financial strength gives them the flexibility to invest in new opportunities and weather economic downturns. They're also investing heavily in research and development, ensuring that they stay ahead of the curve in the ever-evolving tech landscape. From artificial intelligence to quantum computing, Microsoft is at the cutting edge of technological advancements. Now I know what you're thinking. Microsoft is already a huge company. How much more can they really grow? The answer lies in their ability to continuously innovate and expand into new markets. The tech landscape is ever-changing, and Microsoft has proven time and again that they can adapt and thrive in new environments. Microsoft is with a market cap of $2.91 trillion, an EPS of $12.47, and a P/E ratio of 31.38. In 2024, the company reported a revenue of $245.12 billion, with a net income of $88.14 billion. Despite recent market turbulence, Microsoft's stock rallied at the last moment on March 21st, preventing an 8th consecutive week of declines, the longest losing streak since the 2008 financial crisis. Investor interest remains strong, with many seeing Microsoft as a resilient long-term bet. Sustainability is also a growing focus, with the company expanding its renewable energy efforts by adding 475 megawatts of solar power to its data centers. This aligns with its long-term strategy of meeting growing energy demands in a sustainable manner. Microsoft's financials are equally impressive, with a staggering 43.97% profit margin, a return on equity of 32.83%, and a low debt-to-equity ratio of just 0.22. These metrics highlight the company's profitability, efficiency, and conservative financial management. What sets Microsoft apart is its competitive edge. Its strong brand, high switching costs, network effects, and economies of scale provide a significant moat, making it difficult for competitors to challenge its dominance. The company's intangible assets, including patents and proprietary technologies, further reinforce this position. With intrinsic value estimates suggesting Microsoft is currently undervalued, trading at $391.26, nearly 20% below its fair value price of $468.64, the stock remains an attractive option for long-term investors. The company's financial health indicators, along with a resilient share buyback policy and an industry-leading competitive position, underscore its status as a powerhouse in the technology sector. Microsoft's growth story is far from over. They are constantly exploring new technologies and business models, ensuring that they remain at the forefront of innovation. They're constantly expanding into new markets, developing new products, and finding new ways to monetize their existing user base. Whether it's through strategic acquisitions or organic growth, Microsoft is always looking for the next big opportunity. If you're looking for a tech stock with a proven track record of innovation, a dominant market position, and a bright future, Microsoft is a no-brainer. Their ability to execute on their vision and deliver value to customers and shareholders alike makes them a standout in the tech industry. This is a company that's built to last, and I believe they'll continue to deliver strong returns for investors for years to come. With their diversified portfolio, strong financials, and relentless focus on innovation, Microsoft is well-positioned to remain a leader in the tech industry. So there you have it, folks. 3 monster stocks that I believe are poised to deliver incredible returns over the next decade. Honeywell International, the Industrial Titan, Chipotle Mexican Grill, the Fast Casual King, and Microsoft, the tech behemoth. These are companies with strong track records, solid financials, and massive growth potential. Ultimately, whether it's Honeywell's industrial strength, Chipotle's expanding market dominance, or Microsoft's technological leadership, each of these companies presents unique opportunities for investors. As always, thorough research and a long-term perspective remain key in making the best investment decisions. If you want to take your investing to the next level, Forecaster is the ultimate tool I trust to find incredible stocks like these. Don't wait. Try it for free today. Just click the link in the description with my code Galore10 for an exclusive 10% discount. If you want exclusive stock tips, in-depth analysis, real-time trade alerts, and free investing guides, join the Stocks Galore Patreon today and take your investing game to the next level. Our members there get full in-depth analysis on most of these stocks I mention here. Head over to patreon.com/stocksgalore and become part of our growing community of smart investors. Link is in the description. Now I want to hear from you. Which of these monster stocks are you most excited about? Are you already invested in any of them? Let me know in the comments below. And don't forget to hit the like button, share this video with your friends, and subscribe to the channel for more investing insights. Until next time, happy investing.